typical December IV crush kind of pop here has happened. I wouldn't really call it a rally, but just kind of a drift higher and higher. We have 69.84 on the S&P. Kind of toying with approaching new all-time highs here. NASDAQ is 25,900. The VIX has gone down into the 13s for the lowest price since last December, as typically that's what happens, is that all the volatility shakes out, especially after the increase in volatility we had at the beginning of the month with all of the data. Data is now past, end of the year, there's nothing here. Volatility gets crushed to levels not seen since last December, and the markets just kind of drift a little bit into this upper range. So, shouldn't be anything surprising. This is what happens year after year. Weekly thesis works out, and then we're now going into the next year of 2026, where arguably it's going to be very volatile with the new rate policy on the books. What's up, Trippy Mike? And that's really what I want to hammer down on, is that we have a lot of volatility coming out. Just 2026 early on is going to be substantial. January right now is pricing in a pause, but that could change. If you remember, December's rate policy was priced in at a pause up until about the last week of Thanksgiving into the first week of December, and then it quickly went from a probable pause and it switched over into a likely cut, and of course we ended up cutting. So depends on the data, obviously. What's up, Dan? Trippy Mike, how you doing? Hope everybody had a fantastic Christmas. Fantastic Christmas. Man, it was great. It was great. This is the first time since June that I've gone this long without putting on a trade. It's awesome. I highly recommend it. I cannot stress it enough that y'all need to get away from the computer periodically. Don't take a trade. Don't do any analysis. Just chill. It's awesome. Come back revitalized. Come back revitalized. What's up, Raskaya? How you doing? Escaped the in-laws indeed. How are the in-laws? Are they as Italian? I love it. Like a scene from Goodfellas over at Dan's house. What do I amuse you? You say I'm a clown? You're a funny guy. Man, I got a lot. All right, here we go. Gabagoo. So, NASDAQ, we have a little bit of a bottom wick out of the gate. Again, I'm not really coming on here to kind of analyze today's price action. I'm not going to stay on here the full time, probably 30 minutes to an hour. I'm back home, of course. We're no longer in Colorado. But, yeah, we're just going to kind of go over some things. We might take a trade. I don't know. Whatever. I'm kind of checked out at the moment, I'll be honest. Gold and silver continue to do crazy stuff. 45.61 on gold as they prepare for what's coming in 2026. Silver is also doing equivalently crazy stuff. Look at this. Exponential $74.82 last night at the family party. My father-in-law brought out a whole plethora of silver coins from the 1830s. From the 1830s. And we're talking, typically these coins are looked at as very valuable just from historical value. But they're made out of silver. At this point, what's greater, the historical value or the material value? It's pretty crazy. It's pretty crazy. Did he make you an offer he can't refuse? Yeah. He's far from Italian, though. They are very much settlers from the 1700s. On the ground at the Bullion Center in Singapore. Bullion Center? Oh, nice. Gold and silver reach record highs. This is what real demand looks like. You out the door. Customer stacking, metal moving. Jeez Louise. Anyway, yeah, so silver's doing crazy stuff. Gold is continuing to do silver stuff, which is not necessarily normal. There's a whole bunch of theories on what's going on with the silver and gold and what it means for the markets. I think the common consensus, though, is that the dollar is going to get crushed. I think that's what kind of the market is preparing for. It may be intentional. It may be environmental, meaning the conditions of the market are not the stock market, but the economy are driving the devaluation of the dollar and the increased value of the silver and gold. So it could be intentional. It could be not. It could be through Bitcoin, crypto, kind of switch over or transfer of powers for currency, so to speak. Who knows? All that to say, that's way over my head. That's not my job. Headset. It's not my job to opine on that kind of stuff, but it's definitely something that we need to pay attention to. Anyway, NASDAQ here has this strong trend line that is getting ready to breach. Again, for the 8 millionth time, I am not a trend line trader. However, I do like to take note of these given certain circumstances. At the moment, we have 600 million of puts sold, 212 million of calls purchased. 70 style inflation? Yeah, that would suck. That would suck. Bottom wick back up. Apparently, the Captain Condor got wrecked this week. If you remember, I think it was on Monday I posted that SpotGamma reported a very large $340 million per leg iron condor that typically you see on environments like this where people don't expect very big movement. And the upside, the call leg of it got breached, and he doubled down and got breached again. And then finally today he is not on the books, last I checked. So Captain Condor continues to get breached, and I guess today he finally hit the old dusty trail. So, yeah, 25,900 here NASDAQ. The S&P is gone a little bit higher relatively. Nvidia's up another 1.7 after a nice recovery. And the X's are mixed. Again, whatever. What do y'all think is going to happen in 26? Do you think bullishness? Do you think bull year or bear year? What's up, YouTube? How you doing? Street Salsa, Hassan, Ray. Good morning. Hope you had a fantastic Christmas with the family. I was calling out price action going to Captain Condor's Soul call wing. Crazy melt up. Nice. 24/7 on NASDAQ in March. All I know is whatever happens is going to be cold as ice this week. Yeah, it's crazy here, man. We got off the plane from Colorado, and it's like 75 degrees. I'm like, what is going on? The next couple of weeks is supposed to be 70s. It's like, I thought this was wintertime. It's crazy, man. Yeah, I'm serious. It's nuts. Like right now, like I went out this morning, shorts and a t-shirt. And I'm like, man, this is like, not only am I comfortable, I'm warm. It's like, what's going on here? It's like if I would have thought that global warming would have brought me beautiful temperatures in December, I'd have been outside earlier spraying aerosol cans in the atmosphere. Finally, after all these years of spraying chemicals into the atmosphere with chemtrails, it's finally paying off. You're welcome. Oh, is that cold? That's what happens. You're up there in the freaking North Pole there, Dan. Come down and join the rest of us. Soon, baby. Soon. Thank goodness for global warming, yeah. The diet starts today? Oh, nice, Anthony. I'm not a big fan of New Year's resolutions, but I love the thought mindset of just getting right and switching that over. Get after it, baby. Get after it. All right, ES is kind of bottom ticking, still going higher. We're finishing the week's grind. I would expect today is going to be the last day of the bullishness for now, and I think we'll have a little bit of retracement going into next week, and then, of course, on January 1st. 80 degrees in Dallas yesterday. It's crazy. It's crazy. There's a bunch of put selling and call buying right now. 780 million of puts sold, 500 in calls purchased, and just kind of grinding. Oil is now $57 down here, $57.90, as silver continues to now become more valuable than oil, which is a little silly. It's 80 degrees down here in Tulsa. Man, that's crazy. It's crazy. I just eat too much. Yeah, my problem has always been portion sizes. I've never been someone who eats crap food all the time or snacks and stuff. I'm not a big snacker, but when I eat, I eat. And that's my I'll blame my grandma for that one. She's always come good. It was either Spanish rice or like pasta fajoule, baby. She's a pile it on. That's why I like working out so much. So we have this little trend line on NASDAQ. 25,926. Still just kind of grinding up. We're up from 860 to 920. So about what? About 60 points on NASDAQ, which is not very much. The S&P, we're up from 80 to 90. That's 10 points. Again, I didn't expect much out of today. If you look at the 240-minute chart, the 4-hour charts here, it's been obviously very, very bullish this week as we just grind it up to undo last week's. And that's pretty much all we've done is that last week we spent selling. This week we spent buying for a net neutral. And if you look at the daily chart, we're right back up to the top of the range. As the range we've been in now for 2.5 months. Here's what's let us sports America. You're gonna have a leg brace either way. TPT free evals. We'll be doing some more free evals. Yeah. We'll be doing some. I gave away all my allotted evals, so we'll be doing more some. My daughter got a 3D printer for Christmas. That is the most fascinating tool I've ever seen. Yeah, it is pretty cool, man. I've been kind of tinkering around with it, showing her how to use it, learning how to use it myself. It's awesome. You could print anything, dude. It makes my AR-15 very happy. You know, you need a print. What kind of 3D printer? I think it's a Creately. I think that you said Creately. It's not a high end. It's an entry level model. Yeah, Creality. I don't know how to say that word, but pretty cool stuff, man. Pretty cool stuff. Top wick right here, 69.91. A couple of minor top wicks. Back over. .3D print missile launchers. Nice. Kermit the Frog. Thought it was a new promo. Oh, the free evals. Actually, I need to change that. They don't offer free evals anymore. They do not offer free evals anymore. Thank you for pointing that out. I'll change it after here. I'm just going to mute that for today, and I'll change that for Monday. A little bit of a top wick over here. Nice, nice, all the way down. Beautiful. We have 3 top wicks on NASDAQ coming back over. Nice. Yeah, so TPT has now gone back to the 40% off. They no longer offer the free evals, but they still do 40% off, and they still will give you a free funded account. So once you pass the eval, there is 0 activation fee on the funded account, making it one of the lowest costs of entry to be funded of all prop firms. Oh my gosh, Stan. They was slam silver at the open. They're getting to the point where they can't do much anymore at that price. Well, you know, the interesting thing about that, Trippy Mike, and I think you're kind of onto something there, is the absolute demand of these metal prices. And of course, we're not dealing with the actual demand of the physical product. We're dealing with the futures products, right? So right now, the futures products are saying, hey, supply is constrained and prices are going to go nuts, which is, you know, obviously just a general discussion of supply and demand will tell you the reason why the price action is doing this. But the real question is why is supply being constrained? Why is demand so high? What's causing people to bum rush physical gold and physical silver? A lot of people say that China is buying up gold for a reason, to kind of hoard the supply. But, you know, again, that's conjecture. Who knows? Who knows the real reason? Looks like TradingView did some updates. Can't say I have a care for them, but, you know, whatever. DXY is under 100 again, 97. and is now bottomed out now since April of 2025 and can't catch a bid. So the dollar continues to be devalued. We are now going down to June 2021 prices. And at which point does the destruction of the dollar stop? In fact, the dollar's been getting smoked since 2022, which was the height of the liquidity craze. That's when all the liquidity began to be backed off because we injected so much from 2020, which was the bottom here, all the way to 2022, which was the top of the liquidity market. And they've been, supposedly backing off liquidity since, and DXY has been getting crushed. So we'll see. Interesting. And of course, NASDAQ chart. Good morning, Natalie. How you doing? Just kind of coming on here, chewing a little bit. I suspect positioning for solar power AI. That would be interesting. You know what got me thinking about this 3D printer? Because we have an electric generator called the Jackery. It's a very large power bank. You can run refrigerators off of it and other stuff, and it's solar powered. So you could put this big solar panel up and it'll recharge it. It's fantastic. So I got to thinking, in a survival situation, I got a 3D printer that can be powered by the Jackery. If I had a USB with a bunch of survival stuff on it that I could print, it's amazing. I could have like my own little tools being created, like weapons and arrowheads and maybe, cups and spoons, knives that I can use and print as needed in a survival situation. Can't even run a laptop off solar. Yeah. I let you down. Didn't warn you about the wind and lack of snow here in Colorado. Man, that was crazy. How was the vacation? What's up, Wesley? It was actually very awesome. I was not necessarily looking forward to the conditions. We go almost every December. Occasionally we've gone different months than December to Vail. But with the 50 degrees and sunny, I was expecting terrible conditions. But there was only like 10 slopes open, so it wasn't much skiing, but the conditions were a lot better than I expected. Very icy, of course, but we made the best of it. We just skied all day, every day. We had no problem getting as many runs as we wanted to. So it was great. We made the best of it. So NASDAQ is putting on a couple of little wicks here. We've got this stuff going on. I popped into a very small position size just to check a trading day box on my 5 evals that I'm trying to pass on TPT, because I'm getting ready for January and making sure all my accounts in order. Obviously I'm not doing much trading here, but honestly I could care less about the rest of the month. I've had an extraordinary month. I brought in nearly $30,000 just in TPT alone. So my goal is I want to have my 500 on TPT plus a couple of extra accounts in the bank to get ready for January. So that's all I care about. I could care less about February through the rest of the 2026. I'm focusing on January here and getting all my tools ready. And I encourage you all to do the same thing, is that focus on 1 month at a time here. That's what I'm going to be doing. A little bit of red candle here after you see 3 top wicks, all with volume here too. We do have a small, very weak 3C indication on the 1 minute. If you go over to the 5, you've got the technical low would be right here. There we go. I'm going to be doing a lot of content once I kind of get back into the swing of things of how to manage prop firms, strategy. I decided I'm going to go headlong on getting this book finished. This book is, I started writing it back in 2022, and I realized how difficult it was. But I think now with the 3 Cs, I'm gonna really push that. So that's going to be my goal. I guess if I have a New Year's resolution, it'll be to finish this book this year. I do not remember if I saw over 8 billion in calls on SPY as we did on 1224. 8 billion on calls? Really? On 1224? That's very surprising. That's like That's like high volatility VIX 20 stuff. I think I can go back and look. Let's see. Yeah, 8 billion. Holy smokes. What was the price action on Wednesday? So Wednesday from 57, it was a 35-point move. Really, that's a very small move for 8 billion in calls. I just realized I've been talking with the community muted. Apologize. Top wick coming off. A little bit of red here, dropping. Sweeping red candles on NASDAQ. A little bit of lower move here from whatever that was. Looks like they're just going to make a move down to the low of the day. Trying to. Yeah, 8 billion in calls is a little ridiculous. I didn't realize that there's that many calls in the books, and it's a very small move compared to how many calls. Usually, when we say 8 billion in calls, we're looking at 100 points on the ES, 110 points. Not to mention the day before Christmas, they're going to put on 8 billion in calls and only move it 30 points. It's nuts. Bottom wick, high volume ES. I feel like yeah. What's TPT? TPT is Take Profit Trader. Take Profit Trader, which is my recommended prop firm. I believe Take Profit Trader is the best prop firm, is the business hands down, not even close. Especially now that Top Step has kind of fallen from grace and people are starting to bail on Top Step, and rightfully so. I think TPT is going to be the best and take over as king. If they could just clear up their customer service issues, I think it would be an extraordinary. I mean, I think they would absolutely blow up. Yeah, I agree. Eminem Shaw, it looks like the same thing. Can you explain calls and puts to beginners? Yes, I can. How beginner are we talking? Like brand new, just open up a brokerage for the first time, know nothing, or I know a little bit. How basic do I need to go? What's up, mutilation? How's it going? Complete beginner. Okay. So you've got the stock market. I'm sure you're aware of that. SPY, NASDAQ, Tesla, stocks. You go out and you buy a common, you pay the stock price, you sell the stock price, whatever it is. If you buy a share of SPY, it goes from 691 to 692. You've got one share, you make $1. There you go. Well, on those stocks, you can play something called derivatives, which are just a fancy word for options. Options are a contract that you buy to speculate on the movement of the underlying SPY, whatever it is. You could do it on stocks, you could do it on ETFs, whichever. So if you want the price action, I need to do a beginner video, like a basic beginner call video. If you want the price to go up, you want to buy a call. If you want the price to go down, you want to buy a put. You want to buy a put. So calls are bullish, puts are bearish. So that's the general framework of thinking about options here. If you go into a brokerage account and then you open up your options chain, you'll see all the puts all the calls on the left, all the puts on the right, and you'll see the premiums that you want to pay for it, and that's the premiums that you want to purchase the contract. So if you go to the SPY and you look at calls and puts, options are going to range anywhere between $1.80 up to $3.50 for at the money positions given on the IV and the volatility. So you'll pay $3.50 per contract, which is going to cost you $350 because every option accounts for 100 contracts, which I don't want to get too far into that and confuse you. But if you look at the $3.50 premium, it's going to cost you $350 to purchase that contract. And if you purchased a call at $350 and the price of the SPY or whatever you want to buy goes up, then you are going to make money on that position. Sometimes a little, sometimes a lot. Sometimes a lot. So what does that mean in terms of what you're seeing here on the left? On the left of the YouTube, you've got the Spot Gamma Hero tool, which tracks the institutional, not retail, but the institutional or the big boys buying or selling of the calls and puts. The green line is calls, the blue line are puts, or purple, whatever, it depends on what you prefer. If you see the green line going up, you're saying that the big boys are buying a crap ton of calls. If you're seeing the blue line go up, you're seeing that they are selling the puts. When you sell the puts and buy calls, that is both bullish. If you see this blue line going down, that is buying puts, which is a bearish activity. Bearish means going down, bullish means going up. So, all in all, if the green line goes up, it's bullish. If the green line goes down, it's bearish. Am I doing a TPT video or podcast for dummies? I am, yep. I'll be doing both a podcast and a YouTube video on that. Because every option equals 100 shares, 100%. Why don't more people play a call with a 90 delta? I see people all the time playing with a 50 or 70, etc. Because playing a 90 delta is low risk. You're not getting a lot of reward. You're not getting as much reward if you're playing a very small delta product. The closer the delta gets to 1, the more like a stock that the option performs. So if you play a very high delta option, it's not going to have as much risk, but it's also not going to have much reward. If you play a very far outside of the money, low delta option, and you get a very advantageous move, you're going to make a crap ton of money, and that's why. Because people like risk. Some people like risk a little too much. Mrs. OM is always harping on me to do a very basic entry-level beginner options video. And I always say, like, there's a billion of them out there. All I'm going to do is reinvent the wheel, but I guess I need to do it. She's right. She's smarter than I am. All in all, stay away from options. Well, options have their place. I do agree that options are abused and they're treated as a casino. But you've got to respect options because they can make you a lot of money, but there's no intrinsic value with options. That's the problem. That's I guess controversial. They can have some intrinsic value depending how you play them, but the way retail plays them, there's no intrinsic value. SPY, if you buy SPY and it goes down on you, you can just pretty much hold it perpetually, and eventually you're going to make money. With options, you cannot do that. There's no value in options. It will go to zero. You're welcome, IDK. You are the options. Yeah, that's true. That's true. What a world. What do you got? What do you got? Little Pasadena. Sunday's supposed to be 75 degrees and clear skies. That is crazy. Crazy. All my fall garlic is going to start sprouting, man. Colder here than where you're at. It is. Silver? What's silver doing? Silver's still going, baby. High volume top wick there at 8:58, 9:58 Eastern. At 75.39 on silver. Gold is still kind of downtrending. They put on a little 3C there too. How have y'all been forming with the 3Cs without me? Have they been working still? Y'all been trading well? The 3Cs, baby. The 3Cs. Nasdaq still downtrending. Wednesday's using trading days to buy calls and close your broker. Nice. Loving them. Getting better. Works like a charm. I love it. I love it. Y'all are killing it, man. Killing it. Anybody take any more payouts from TPT? Still having success? Where's D-Trend? I know he was having some success. NASDAQ is about to test low of the day at 25,864 with volumes coming in right here. I'm doing a lot of Wednesday's action. Overnight low is right here at about, what, 843? NASDAQ is expanding lower. Very large red candle. Not much move in the market to have 3 Cs. Well, we'll see how it plays out here. We have some pretty decent movement, all things considered, from 935 all the way down. That's about a 100-point drop on NASDAQ. And we have the second highest volume candle coming close to the first high volume candle of the day here on NASDAQ, down to 849, 846. So that, not counting the opening candle, which I don't, that is by far the largest candle of the day, with a very large move with an incredibly small bottom wick as they just smoked overnight lows. So let's see if the buyers are going to defend overnight lows. If not, of course, you come on back down to yesterday's lows, which is 780. Now, that's a very large move, all things considered, but they're kind of undoing what happened on Wednesday, the day before Christmas. Let's go to today's hero. Right now, we have a bunch of call selling, 1.2 billion of calls sold, and they have sold off a crap ton. That is a 1.7 billion sell-off of calls. You see this green line go all the way down? And puts are now down 187 million. So they've bought back about $1 billion of puts, and they've sold off 1.8 billion of calls. So very, very bearish options chain. The exact opposite of what happened on Wednesday. And now that they've taken out that high volume spike, you see how aggressive the sellers are here. On down. Interesting. Captain Condor's wrecking the market. I don't think he's on the books today. Yeah, he's not on the books today. He finally he got wrecked on Wednesday and he bailed. Licking his wounds. Look at his wounds. $25,850. Crazy stuff, dude. Why do people use lows or highs as targets? Can you explain how to use them? Yeah, sure. So, plotting highs and lows in those type of areas is not a system. It's just being aware of market conditions. It's a tool that you use to implement views of movement in your system. Excuse me. Hey, look, nice little bounce, 3 Cs, baby. So what do I mean by that? What do I mean by that? I mean, if you go back and look, the easy stuff that you need to be doing before anything else is just kind of going through here and plotting. Here's an overnight low. Here's the overnight high. Here's the prior session low. Here's the prior session high right there. And then, stuff like this. This is the easy stuff. Overnight high. And these are the easy pivots because when the market pivots, bounces, rejects, it's telling you where the liquidity is. Your job as a trader, and hopefully you learn to be a VPA trader, a volume price analysis trader such as myself, is that the market is going to show you where the liquidity is through pivoting. And the stronger the pivot, the stronger the wick of price action, then the stronger the liquidity you're going to have. So my job is to come through here and plot these levels. I mean, look, this was an overnight low touch right here, and we had a bounce right off of it. Not only did we have a bounce off of it, but what else did we have? We had a very high volume inflow, which means a volume spike, which is the first criteria of my system. The highest volume candle of the day, because I do not count the opening candle. So we had the highest volume candle of the day. We had a nice bottom wick, and now we have a higher high than 1 minute. If you go to search on the 5 minute, we don't have a higher high yet. The technical higher high would be 880 on the 1 minute, unless this candle closes here in a couple minutes, and then we'll have about 870. But either way, we have a 3C forming right off the overnight low. So that's an easy way to put on a scalp and net, 20 to 50 points very quickly in the morning time on NASDAQ. So your job, again, to summarize, is to find out where the market is inducing liquidity at. I'll be right back. 1 second. All right. What do we have here? So you see them. They sold off a whole bunch of calls. They bought some back. So they bought a bunch of puts and sold some back off, and we have a high volume 3C, 2C bounce so far. We're about to have a 3C. Hope all that makes sense, IDK. Let me know if I need to clear that up. Silver new high. Gold's bouncing back up. Silver's still going. Excellent. NASDAQ is in the process of putting on the 3C if it can hold it. We do have volume, of course. If they do take out this retest, this is an SR flip. If they do take out this SR flip, it'll start to approach back up, but that's the main level. Prior support is now a new resistance. So if they break it, we're going to plunge probably down to 780. So this is a very important level to retake for the buyers. The 3Cs, look at that, reject right off of it. The 3Cs saved me twice from catching fallen knives. Hardest thing to do is be patient and letting your emotions take over. Oh, absolutely. Absolutely. In fact, if you remember back in June, that process when I was always buy the dip. I didn't take any shorts. I was relentlessly buy the dip. And literally, I would wait. If the morning was selling off, if NASDAQ sold off 200 points, I wouldn't take a single short. I would sit there and wait and wait and wait until I got the 3C, and then I would enter. And that was the thing I was in. And that helped me not catch falling knives. There were times where I entered just a touch early, but even when I entered early, the damage was minimal because I just caught near the bottom, and it went down just a little bit, bounced, and then, of course, I was good. But even if you have an incredibly high volume spike, even if you're of course, as long as you're properly positioned, that it's going to help you keep from getting demolished. Even when you're wrong, you're not going to get demolished. And when you're right, you're going to get paid very well. So the 3Cs are fantastic. NASDAQ is once again rejecting this SR flip. If it breaks, it's going to drop significantly, probably down to 780, as they're exact opposite. They're doing exact opposite of what happened on Wednesday. New low of the day for NASDAQ. They're plunging. And this is probably going to give this baby out. Right here. How do market makers react to all these calls that are being sold for January? Well, that's a great question. My counter question to you is, what is not the market makers. I think the market makers are probably, I think you actually probably mean the dealers. I could be wrong about that, but there's a difference between the actual dealers and the big players and the market makers. So the market makers are non-reactive. Their job is to make a market, and it's not really to do anything else. The dealers, the institutions, the hedge funds, all that kind of stuff. So their primary job is to hedge, and the primary use of options is to hedge. It's not only till recently did people look at options as a mechanism on to play directionally or to actually make money. The issue with the use of options is to hedge. So these large hedge funds, these large dealers, by law, by regulation, they are not allowed to put on directional products without hedging. They're not allowed to be directionally risked on one side of the market or the other. So when options begin to change, or the price action begins to change quickly or unexpectedly, then there's a scramble to hedge. And right now, what we're seeing here is that the market has had a tailwind now for 4 days. Very high, very slow, very grindy, with the VIX falling off here as typically does in Christmas. So now we're seeing a whole crap ton of call selling to take profits. And with that said, it's most likely a derivative of hedging. Is that as options become very inflated, as the premiums become very inflated, because when you buy a call and the market goes up for 4 days, those premiums are going to be very inflated. Now it's time to juice those premiums, or big old fat juicy orange. You squeeze it, you get all the juice out. That's what the call premiums are doing. So the dealers come in and they sell all those calls at the top, which a sold call is opposite of a bought call. A sold call is a bearish position. It's what I would call a passive bearish position. And all a sold call means is that, if we're looking at the S&P, let's go to SPY. If we're looking at the S&P and I sell a 692 call, let's say right here. Let's say I go into my brokerage account this morning because I think, hey, the market's been up for 4 days. I don't think it's going anymore. So I am going to sell a 692 call. Whatever strike. You could pick whatever option or whatever expiration you want. Let's call it a 0 DT. I want to sell the 692 call. That means that I do not think the price action will cross by the expiration date this 691. It can go up and go down. It could even go up a little bit beyond it and then fall back down. But I do not think that it'll close above the 692. That's basically what I'm saying here. And you're selling for a credit, which means if you sell this thing for, let's say you sell it for $4, which is $400, you get credited into your account $400 right now. So I sell that call for $4, and the powers that be give me $400 into my brokerage account. My job is to keep that money. That's why it's called a credit. It's in your bank account. Your job is to keep that money. So if you're correct and this price action closes down today under 692, then this $400 stays inside my account. If I sell it for 50% profit, then I have to basically settle up a debit of $200 and give back $200, and I keep $200, and there you go. But overall, that's the mechanism of selling a call. It is kind of passive, where you're thinking the market's it's not necessarily going to go down, but it's not going to go any higher. So when dealers see this type of price action where premiums are very inflated, they're going to sell a call, and now they have a negative delta exposure on their books. And now their job is to hedge that position back to delta neutral. In order to do that, there's a whole bunch of mechanisms that do that affects the price action, and it all comes down to how aggressive is the skew on the options. Right now, it's pretty aggressive. We've got 1.3 billion of sold calls. We have 180 million of purchase puts, which is driving a heavy negative delta environment of a negative gamma, negative delta. Looking at Nasdaq in its current move, when do you need to restart and look for a new high volume candle wick, which essentially clears the board in two pre's. So once you take out the prior low, that negates the setup. So if you look on Nasdaq here, we had a very high volume spike with a bottom wick. It was scalpable, but it was no follow through. The 5-minute never gave you a 3C trigger. The 1 minute, if you were trading off the 1 minute, did. You could have got yourself, if you're trading off the 1 minute, 20 points or so. So that's not something I really recommend. I don't like scalping off the 1 minute. I only do a volume analysis on the 1 minute. So the 5-minute never actually triggered a 3C. So once you take out that prior low and close, which we haven't yet, all we did is do a double bounce. Once we close it, it negates the 3C. So right now the 3C is still intact because we haven't swept out the prior low for a liquidity sweep. And all it's doing now is appears to do some sort of double bounce, which is very, very typical with a bounce. It's very rare. It's very rare the market bounces. Typically it goes something like this, or even a triple bounce and then goes up. So the way I go about it is that if they sweep these lows and close it, it negates the 3C altogether. Right now it's still intact. So on the 5-minute, you need to clear 872. I would put it right there. That's your line to go long on the 5-minute. If they clear 872, then you could play up either 50% of the range could be used as a target, which will only net you about 10 points, or the high of the day of 937. Y'all are asking some fantastic questions today, considering it's the day after Christmas. I love it. I love it. Y'all see Sean Ryan do that interview with Hunter Biden? Looking forward to listening to that, actually. Do you only use the 5-minute for the third C? How about you third C for if I'm scalping most of the time, I'm looking at the 5-minute. If I'm doing some longer term trades, or if I have a bigger setup, then I'll go the 15. So for example, if I think we're going to put on a day or 2-day bounce, I'll use the 15 to kind of get me into a position I hold all day. If I want to put on a 10 or 15-minute position, the 5-minute, very rarely will I enter a trade based purely on the 1 minute, if ever. I mean, it's very rare. And even then, it's a very small position sizing. The only time I'll do that is if I elect to trade the first 15 minutes of the session, which I rarely do. And if I do that, position size comes way down. Because when you trade on the 1 minute, you're taking on more risk. And every time you take on more risk, you have to pull position sizing back. The retail trader thinks opposite. They want to take big position size risk, which is why you get wrecked with a capital R. So if I want to take on risk by confirming on the 1 minute in the first 15 minutes, I have to pull the position sizing way back. So you could do whatever you want. If you want to trade off the 30-second chart, fine, but you got to pull position sizing back. All right, so we took out that high. That's a double bounce with volume. Closed my longs on Christmas Eve. Nice sling. Well done. So you see NASDAQ on the 5 finally cleared the level. We're up and up. If we close it, high of the day, baby. This is the SR flip. We've already rejected it once. This is going to be your target. This red line right here. This is your overnight low here. This is your SR flip. Actually, it's here. But your higher high is there. That's your trigger for 3Cs. Finished up his iodine scan treatment. Just notice your stream. What's up, Kennedy? Nice. I love it. I love it. Do you see your trend line break today on NASDAQ? Do you see this? I was thinking about you this morning. Look at that. Three C's are going now. 880. 880. That volume, baby. That volume. Walks into an eval profit target with that single candle on a micro. Nice DV. Well done. Well done. I made a little profit on my 5 TPT evals for next week. Do y'all budget for prop firm eval fees, or do you just kind of wing it, reset as you need? How do y'all approach prop firms? YOLO? Nice. I budget $1,000 a month for prop firm evals. Sometimes I use it, sometimes I don't, but I'm always spending some of it at least because I'm always resetting, or I'm always providing new evals. Always. Even when I have 5 funded accounts that are going great, I'm always passing new evals and just so they can just waiting, ready. So when I blow up the prop firms, they're waiting, they're set. I allow myself 2 resets per month, keep the cost down, and keeps me disciplined for the most part. Nice. I mostly do safe account, but I have one account like I do gamble on. Nice. I like your army mentality, so I'm just re-upping 5 monthly. It's beautiful, Phil. Beautiful. You budget? Nice. A micro scalp 1 minute on the indicator for max profit $100. There you go. Max profit $100. I mean, that's probably pretty repeatable. If you're only going for $100, that's 5 points on Nasdaq minis. So, you could probably make that pretty repeatable as long as your entries aren't just terrible. Heck, you could take an entry and put a target profit 5 points above your entry and hit it probably a good portion of the time. Again, as long as your entries aren't terrible. You're up $1,000 today. Nice. That's a cool little post-Christmas gift. Honestly, when I started, I was too confident in my system to believe that I needed to worry. Then I realized the rules are strict and don't allow me to use my swing methods like my personal. I essentially relearned how to apply scalping in shorter time frames. Max 1 reset per eval, 2 evals a month. Nice. Very cool, Kennedy. Yep. Once you learn how to stop fighting the prop firms, your mentality changes. It's not a brokerage account. So I pull out every dollar I can except the 2x buffer, put it into my brokerage account. Sometimes I'll put it straight to my personal bank account and spend it. But my goal is to expand the bubble through leverage with very little risk. And honestly, prop firms, you have unlimited upside and very little risk. You know, if I blow up the account, whatever, it costs me $80, whatever I spend. And of course, I could turn that money into sometimes, if I have a fantastic month, 30 grand in this case, sometimes I'm only pulling out 5 grand a month. It depends. It depends on market conditions. It depends. Sometimes I don't take a payout at all. You know, which is why I took a break back in the summertime. But prop firm's an extraordinary tool. $225 across 5 eval accounts for me. There you go, Frumple. Silver still going? Silver still going. Blasting. Their silver calls are pumping. Love it. Bottom on Nasdaq. I again called the breakout last week on gold and didn't take calls. I need to trust myself more next time. Do it. Do it. In fact, you know, obviously, hopefully you've got a trade log, kind of like what McGurky was talking about, that he not only logs his trades, but he logs when he misses a trade that he knows about. Not when he misses a trade that he's not really paying attention to, but when he notes a trade, everything works out, but he didn't take it, he writes it down. And why does he do that? So I encourage you to do that stuff. So next time when you see that, you make it actionable. That's a dang good idea. Yeah, do it. I mean, honestly, obviously it's okay to miss trades every once in a while, but if you're consistently missing high quality trades that you're identifying, then there's a fear problem. You need to take advantage of that. So there you go. Still bottom looking here on the NASDAQ 5-minute. We're still above the 3C trigger, so you're still good to go. Everything still looks bullish for now. They're back to selling a tremendous amount of puts, so the option chain is back to looking bullish, or at least trending towards that way. And now that we've taken out the 3C, we'll be looking for high of the day. There we go, 895, still going. I see we're in the bear market. Nice. Good stuff, baby. All right. I'll give it a few more minutes. I'm going to call it a day. We'll wrap things up. Like I said, I put on a couple small trades. My goal here was not necessarily to make money. It was just to check the box for my eval accounts for next week. Take a look at next week's price action possibly. I didn't even touch my fundeds today because I'm not really back in the trading mindset yet. I'm still on vacation mode. I have a question. Where should we put our stops if we are buying at a test? Sometimes it triggers the stops and goes up. Well, Victor, the quick, easy answer without going into technical setups is place your. You first need to have better entries, of course. As better entry as possible. You want to start placing your entries where you would normally place your stops because liquidity sweeps are very common. That's why we have double bounces. This was a textbook double bounce, then go higher. Very obvious long entry at the overnight low with volume with the bottom wing. So most people are going to try to pound into that long entry as fast as possible. Then they roll it back over on this 910 candle, stop them all out, go put in a new low, and then bounce it. And now we're up 70 points on NASDAQ. Whereas if you were to just wait it a little bit and be patient, or just held on to your original long, you'd have made tons of money. And the whole point of that is the market does not trend in an efficient market. You need inefficiencies to trend. What does an inefficiency mean? It's a fancy word for, you need to have stacked one side of the book, not the other. If everyone's trying to short, if everyone's trying to long, and the market's crowded, there's going to be a lot of back and forth because you're going to have people taking profit very quickly. You're stopping out a whole bunch of other mechanisms. So they stop out all the longs to create an inefficiency. They get people shorting on the second rollover there. It creates an unbalanced market, and then they put a little pressure, and then the quick bounces occurs, and that's where you start to get it. So it's a combination of a couple of different things. Well, number one is a technical expertise, which is your trading system. Do you have a system on which to determine entries? The second mechanism is understanding patterns. The market does the same thing over and over and over and over again. Double bounces, bounce and rejections off overnight highs and lows, all that kind of stuff. So you need to do your due diligence on understanding the market. Just repeats itself ad nauseum forever. The third mechanism is, of course, having the guts to be patient and take the trade that needs to be taken. I think a lot of people try to enter too soon. That's my primary thing, is is patience. You just got to wait and wait and wait until the absolute last second, where it's not too long waiting, but it's not too soon, which is that little beautiful grace period where your drawdown is minimal. And you've taken a fantastic entry when you take an entry and you have very minimal drawdown, if any drawdown. Sometimes you could take a trade and it never actually sees red. That doesn't happen very often, but if you take a trade and you only face, 10 minutes of red, maybe, 5 or 10, 20 points on NASDAQ of red, and then it bounces on a long, that's a pretty spectacular entry. If you have no more than 20 points of red on NASDAQ, that's a pretty spectacular entry. But you've got to get low enough on a bounce, but not too low where you're catching a falling knife. So knowing where the market bounces, how the market bounces, having a technical system, and then understanding that the market is going to liquidity sweep out the entry, so you need to have your stop beyond where you think they're going to sweep. And of course, you could do all the things right and still get stopped out. But if you really want to focus on trimming up those positions and not getting stopped out, is set your limit orders to enter where you normally set your stop losses. It's going to reduce the number of entries you take, and it's going to increase the quality of your trades taken. Are we doing a weekly brief? Yes, we are. Yeah, we're back to normal operations next week. We do have a market closure next week, of course, the 1st, but I could care less about the 1st of July. That is a social consumer holiday. I don't drink, I don't party, so whatever. I care about Christmas. Why is it when I scale in with 2 micros, I'm up 10 a.m. profit, but I do 10 micros, it goes negative on me? I don't know, man. I have the same exact thing. I could do fantastic results, but the second I turn up big position size, I get wrecked. It's just, you think differently when you turn the risk up. But that's too big of a jump in my opinion, Todd. Instead of going from 2 to 10, you need to go from 2 to 3, and then from 3 to 4, and then 4 to 5, and turn up the risk that way. But when you go to 2 to 10, you are 5xing your risk. And there's an emotional change when that happens. It's not paranormal. It's not like the market is tuned into your IP address and doing everything is countering everything you're doing. It's that you're 5xing your risk, and it changes your emotions. So instead of going from 2 to 10, go from 2 to 3 or 2 to 4. Is 20 points a healthy, consistent profit? I feel like greed kicks in and end up holding. On NASDAQ or ES? ES, 20 points is fantastic. 20 points on NASDAQ is, obviously money is money, but if you're going to trade NASDAQ, then you need to be holding out for more than 20 points in my opinion. But 20 points on ES is fantastic. I mean, that's usually an entire day's range. For NASDAQ, that's like a tick. That's half a wick. Depending on the day, of course. I think the big issue for most of us is spending too much time trading and not enough time building an income once we execute 1 to 2 high-quality opportunities that are realistically available. I agree. I'm here for 1 to 2 trades a day, and that's it. I'm not one of those dudes who's obsessed with being in the markets 24/7. I hate it. You do have to be obsessed with trading to get started, and I was that way at one point. But, now that I've kind of get everything going, I've got my system, I refine when needed, I do my market analysis, I get my trades on, and I'm out. And I'm focusing on building multiple sources of income. I'm focusing on family life. I'm focusing on everything else. I had a long talk with my brother-in-law last night about what he's doing, and of course that's always fun to get around like-minded individuals. So it's awesome, man. It's awesome. So I told you about my brother-in-law doing, he did pressure washing. He sold that business. Last Christmas, he opened up a Christmas light business, hanging Christmas lights. First year, he made 50 G's. Second year, this year, 110. And that's word of mouth. And that's in 3 months. So he's going all in on it, and he's going to scale. And it's fantastic talking about dudes like this. Talking about entrepreneurial dudes who don't complain about, woe is me, the world's against me, I can't make money, I'm stuck in this job. He's like, screw this, man, I'm going after it. Very inspiring. There's so much money to be made out there. It's not even funny. Pick a job and just do it. So much money to be made. Happy holidays, Ray. You're welcome, Victor. Todd, you're welcome. That makes me feel really gusto into quitting my clinics and focusing on the business. Yeah, buddy. I think this is a pretty good market for a day after Christmas. Yeah, I agree. It's got some pretty good setups today, Quackazoid. The holidays in general this year have been better than usual. My version of holidays is price act. Nasdaq chops in a 10-point range and ES is in a 3-point range. That's why I don't even pay attention. But this year actually has been pretty nice. All holidays combined has been very nice. I guess it's the increased degeneracy of the trading world. Do you see silver at 82 and 80? What if there's technology we're not aware of that utilizes silver? I don't know. I think a lot of it has to do with the oncoming conflict we've got. The China-United States conflict is coming. Probably has something to do with that. Not to mention we have an economic war going on here too. Not only do we have an actual kinetic conflict on the horizon, but we have an economic conflict. Japan, who obviously, we're not an enemy of Japan at all, but they are trying to do their best to repatriate their dollars, or the Japanese dollars, into their own market, and that's going to cause some havoc. China, of course, is positioning themselves in gold and silver, and their whole United States treasuries, which they will dump in order to weaken the dollar. Now Europe itself, Britain, whatever you call them nowadays, they are, they have threatened that they will dump United States treasuries if we fail to follow their footsteps in helping Ukraine, which that's still a disaster going on now for 4 years. So, all in all, the United States treasuries is on the hot plate right now from a lot of different players. And I think it's a travesty that there's so many international players that are holding the cards on United States treasuries. There's Venezuela. Yeah, there's Venezuela. Maybe done with $1,000 profit. I think $1,000 is pretty amazing, Todd. I'd probably wrap that up. If I was to walk up to you right now and hand you $1,000 cash, as long as you stop trading for the day, would you do it? Knock on your door with like a giant check, like those sweepstakes? What's the catch? Got to stop trading for the day. Got to shut it down. Always any cash works. There you go. So wrap it up. Be done. Oh, man. All right. I'm going to call it a day. That's it for me. So we'll end it up on the daily chart. We have a 3C going here. We have this trend line rejection, which, again, for the newer people, I do not trade trend lines. I just monitor them for any kind of possible movement. We do have this little price action here that's begun to be a little wicky, start to see a little selling into this, but no volume yet. I can't put on any actionable swing shorts into movement. The overall theme for me is that this green this week, we are still in distribution. We have now been in the same range now since October, early October, so going on 2.5 to almost 3 months now. We've been in this little back and forth range. I think this bullishness this week is a mechanism of the Santa rally. Santa rally can mean anything you want. Some people look at the entire month of December for the Santa rally. Some people look at the last week of December. Whatever it is, whatever green this is, it's a mechanism of the IV rolling off. And I can prove it to you, the fact that if you go look at the premiums for the S&P, they are tanked, If you look at the VIX, it's tanked. It's now gone down to the same level as last December. That's what happened. See back here, December tanked the VIX. Now we tank it again. I think we're going to have a mean reversion on the VIX going into maybe not next week. It could be next week, but into the first week of January, we're going to have a mean reversion of the VIX, where I think the VIX will recapture upper 17s, which will cause a little bit more pressure on the S&P, and will continue this maneuver that we've been in since October to come back down and retest 67.95 or so. That's what I think is going to happen. So be on guard. I don't like chasing bull moves on holiday weeks like this. So. Any hunting deer this weekend? I may, yeah. We killed a squirrel yesterday and cooked it for breakfast, which is fantastic. So I think we're going to get us a deer this weekend too. We only have about 2 more weeks left of deer season here. He took it for butchering. Yeah, I've heard of that. I've heard of doing that. And of course, in a survival situation, I'd take that all day long. But it depends on how the deer was killed. If it's run over by a car, if you've blown the internals out, it's going to ruin a majority of the meat. Not to mention the meat itself that was impacted is going to be bruised, and you can't eat really bruised meat. So it depends on how it's cooked, how it's hit. Yeah, fresh kill don't matter if it's splayed the internals, because if you've got stomach contents and intestine contents, the meat is all bad. You can't touch it anyway. You can't just wash it off. Once you get that acid on the meat, it's no good. Is there even meat on that? Yeah. So the squirrel meat, you can have the flanks. The rear legs and the front the legs. The rear legs are the best. The rear legs is the biggest part of the squirrel meat. But my favorite way to eat a squirrel is you kill about 5 of them, you clean them, and you put all 5 of the whole squirrels, obviously clean, not the fur and everything, but cleaned, processed. Put them in a crock pot with a stew, like potato, corn, onions, all that kind of stuff. You make a stew, and then after a couple hours you debone it, and you've got squirrel stew. It's fantastic. It tastes like chicken. Highly recommend it. It's good stuff. All right. Having said that, I am out. So, received another promotion from the company I work for. I plan on to quit in June. With the baby coming in March, I stalled that plan, working 50, 60 hours a week during the job, but losing valuable time for the business. I think we could triple revenue by end of 26 if I quit my job. Just trying to wait till the baby's born, but I feel like I should do what your family did and take the leap. Yeah, buddy. Yeah, buddy. I completely understand the security of a job. Completely get it. I not everyone's cut out for the stress of entrepreneurship, but sometimes you just got to take the leap, baby. Believe in yourself. I've had rabbit, never had squirrel. I mean, squirrel's not the best, admittedly, but it's food. They're good and they're fun to hunt. And the hunting season is so long that it kind of is like when you have the itch to hunt, and there's nothing else open. Go hunt some squirrel. Make some stew. It's good stuff. All right, y'all. I will see you all bright and early Monday morning for another beautiful week. And, of course, next week, I don't know what to expect, but we'll wrap things up, get cranking, and we'll kind of get back to normal operations here. So, had a fantastic vacation. Looking forward to get back to it. I'll see y'all Monday. I'll see Tier 2 Sunday night. And, of course, next week we'll do our Tier 2 tax savings call, which I'm looking forward to. So, hope you all have a good day. I'm out. See ya.